Professor Roubini, good to see you again here in Davos at the World Economic Forum. What went wrong last year? Greece is still part of the Eurozone and the Euro still exists. So what is your opinion?
Well, there were tail risks last year of Greek exiting, of Italy and Spain losing market access. I think those tail risks have been reduced. They're not zero. They're lower probability this year. One, because the ECB announced this OMT program of bond purchases. That was really successful. The ESM with €500 billion of new money for banks and sovereign was passed. There is now talk about banking, fiscal, economic, political union. And finally, the German attitude towards Greece in specific and the periphery of Eurozone has become more constructive because Germany realized that if Italy and Spain are not out of trouble, then you cannot have an orderly exit of Greece. You'll have massive contagion. So the tail risk have been reduced. However, I would say the following thing. The fundamental problems of the Eurozone remain. You have recession because of the austerity, because of a strong euro, because of the banking credit crunch. You have low potential growth because of aging and lack of productivity growth. You have still high debt ratios in the public sector and the private sector. And you have a loss of competitiveness and external deficit. So the fundamental problems of the Eurozone that are growth, competitiveness, and debt sustainability have not been resolved. The problems have been pushed down the line, kicked the can down the road. So financial strains are reduced, but in the medium term, those problems remain. So this year, the risk of Greece exiting the Eurozone might be only 30%, but over the medium term, say 2 or 3 years, I think there is still a 50% probability that the Greece is going to exit of the Eurozone. You have to think about scenarios.
So you won't share Draghi's view. He said we see a normalization in financial markets. Is it too optimistic, that wording?
Well, there is normalization in the sense that the spreads for Italy and Spain have fallen 250 to 300 basis points relative to what they were in July of last year. That normalization has occurred, but the banking system of the periphery is still damaged. The banks don't have enough capital. Therefore, they are deleveraging by selling assets and contracting credit. That doesn't help economic activity. So there has been balkanization of the banking system as interbank money and wholesale money left the periphery, went back to the core. There was a domestication of public debt as cross-border investors left the public debts of the periphery markets. So these fundamental problems have not been reversed. They've been maybe not made worse, but have not been reversed. So yeah, there is normalization, but with the normalization and creating credit and creating jobs and income and growth, there is still a long way to go.
What should politics in Europe do, or what can European politics do right now?
Well, my view is that while austerity and reforms are necessary, in the short run, as you know, raising tax and cutting spending has a recessionary effect, and the Eurozone needs economic growth for two reasons. One is that otherwise you're going to have a social and political backlash against the austerity if people don't see light at the end of the tunnel in terms of jobs, growth, income, whatever. They're willing to tighten their belts, but they have to see that light. Otherwise you'll have strike, demonstration, riots, violence, extremist party in the right and left becoming more powerful, and eventually weak government collapsing. So you need growth for the social and political sustainability of the reforms, austerity. Two, you're trying to stabilize this debt to income or GDP ratio. If the denominator of that ratio, GDP, keeps on falling, you can work as much as you do on the debt or the deficit, but the debt ratio are going to keep on rising and you still look unsustainable. And I think that while Europe has a banking reform agenda, fiscal union agenda, economic, political agenda, you don't have a growth agenda. There is nothing on the table on reducing the austerity in the periphery, doing a fiscal stimulus in Germany. I would propose cutting taxes in Germany to increase income and consumption, having easier monetary policy by the ECB, having a weaker euro because the strong euro is killing again the periphery, and doing even infrastructure spending throughout the Eurozone funded by common bonds. Those are the policy stimulus, monetary, fiscally, exchange rates and others that can help restore economic growth, and you have to put the growth back in the agenda of the Eurozone.
What should investors do right now? Stocks, bonds, Professor Roubini, or commodities? What is your advice?
Well, you cannot speak about stocks and bonds in general. It depends also which region of the world. I would say that, the bond yields in safe countries are going to stay low. I don't believe that bond yields are going to rise in US or Germany. So You don't have to stay away from bonds, but certainly the risk sentiment is improved. There is some stabilization of economic activity in China and Asia, in the United States, even if Europe still is a recession. So cautiously, investors are putting a little bit more of money at work in risky assets like commodities, like equity. But you have to have a diversified portfolio because there's still tail risk. Eurozone could get still worse. US could have a fight about the debt and a cliff. You have a slowdown in China could occur, and there are Middle Eastern tensions that could lead eventually to military confrontation, say, between Israel and Iran on the nuclear issue. So those are all tail risks that you have to worry about. We're not yet out of the woods. There are still plenty of clouds in the sky, even if today there was sun in Davos in the sky.
So it won't be easy for the US economy as well. You mentioned austerity, you mentioned the fiscal cliff. It will be a difficult year as well for the US economy?
Well, relative to Europe or Japan or UK, US is going to do better, but in absolute terms you'll have maybe 1.6, 1.7 growth because you'll have a fiscal drag coming from raising taxes and cutting spending. So US economic growth is going to remain anemic, subpar, below trend. Another year of mediocre economic growth that implies still elevated levels of the unemployment rate.
Thank you very much, Mr. Roubini. Thanks for talking to you. Bye-bye.